So I finally got some time to break down the hybrid model in detail. So everything you need to know about my framework, my setup, the entry model specifically is going to be in this video. So this is going to be the best way to really get a feel for everything that I do before I even take a trade. Okay, so this video is going to break everything down. Although I'm not great at making these videos, I'm not an influencer or a YouTuber. I may not explain it as clearly as you might like. So if you have any questions or I miss anything out or you're not sure about something, then just ask me any question you want in the comments and I'll get back to you as soon as I can. All right. But I'm going to do my best to break it down as clearly and as simply as I can. Okay, so let's keep it simple as always, right? So the first thing I'm doing when I get to the charts every day, the very first thing is looking at the higher time frames. Okay, here we have the daily chart. So we start on the daily, and the first thing I'm looking for or trying to determine is whether or not we are in a premium or a discount. Okay, what stands out to me is this high and this low. Not this high and low, because they are within a range. If we break this high or break this low, then I'll be looking to reevaluate my range. Okay, so simple stuff. Once I have determined my premium and discount, we want to be taking longs in a discount and shorts in a premium. Now, there are occasions or situations where you may feel like you can take a long in premium or a short in discount, and that's fine. It can work. I do it on occasions, but it depends on a few different factors, on the quality of the price action and the conditions of the market on that specific day, whether we've got news, etc. But as a general rule of thumb, just stick to taking longs in the discount and shorts in the premium. Okay, it's much higher probability. Once I've got my higher time frame, my premium and discount marked out, I'm looking for higher time frame fair value gaps, order blocks, and volume imbalances. If we're right down here, for example, and we've got this new week opening gap here, then of course we're looking for longs anyway, because we're at a discount and we've got this new week opening gap. That's going to be our target. As long as we're down here, that's the target, you know, simple stuff. Okay, let's drop down to the 4 hour. So the 4 hour is where I like to look for fair value gaps, order blocks. Okay, have we inverted an order block, or have we inverted a fair value gap? Have we pushed through a key level, or are we respecting and reacting from that level? That's going to tell you a lot. And the higher time frame is always more relevant, more important than the lower time frames. Okay, so we're always starting here. So let's just say, for example, we're down here in this area. So if you don't see any gaps or any obvious order blocks, look left. I always say look left. Okay, so look at this move down here. This is London session here, these two candles. All right, it's beginning of London session and the duration of London session. We move down, we have a sharp sweep down here, and we sweep all of this liquidity under here. Okay, these stacked up lows, low resistance liquidity. So at this point, if you're trading London, which I don't, you'd be looking left here. Okay, what do we have over here? Fair value gaps on the 4 hour and the 4 hour order block. Let's have a little look. Let's mark this out. There you go. Tapped into a 4 hour fair value gap. At this point, you're in a massive discount. Okay, this is an extreme discount. So if you had this 4 hour fair value gap marked out before the London session and we dip down into it, you've got your volume imbalance up here and you're in a discount, you're taking longs all day. So it's important to have your higher time frame fair value gaps and order blocks marked out. Okay, the third thing I'm doing, I'm looking for SMT. So SMT is not something that is compulsory. We don't need an SMT, but it's just a nice confluence to have. If we look at ES, go to the 4 hour and look to the left, how has ES behaved here? The same 4 hour gap is here. Now ES has not reached that 4 hour gap, and NQ has reached down and tapped into that 4 hour. So we have SMT, a bullish SMT as well. Okay, now as I said, it's not compulsory, we don't need that, but it's just a good extra confluence to have. If you see that, it's going to give you more confidence in taking the trade. And it does also mean that NQ has reached down for liquidity and ES has not followed, because the real move is to go up. Okay, if they're both moving in tandem and they're both pushing down, there's less chance of a reversal. So quick recap. We've determined our premium and discount levels. We've determined our high time frame fair value gap or order block or volume imbalances, and we've determined our SMT. Step 2, levels. I'm now going to mark out my chart on the 15-minute. I've got specific key levels or data reference points that I know the market likes to refer to and react from, and these are my levels. Let's take Friday, for example. Let's imagine we get to the charts, as I do, around 8:30 every day. Okay, I want to determine these levels: session high and low, previous day high and low, midnight open, yesterday's close, and yesterday's 9:30 open. I want to mark out all those levels on my charts before anything else. Let's do that. Obviously, TradingView's got the session indicator here. It's got your open and close and your high and low. So you could mark them out, or you can just have your indicator. I like to actually mark them out. So you want Asia high and low, London high and low, previous daily high, And previous daily low is down here at just below London lows, so I'd mark that out. Okay, next level is midnight open. Next level is regular trading hours close, okay, RTH close, which is just yesterday's market close price, okay. That is a strong data point and a magnet for price. This also helps to determine whether you're in a premium or a discount, and we'll get to that shortly. Go here, session, regular trading hours. This is our close from yesterday. This is our Friday 9:30 open, and this is our Thursday close, okay. So just mark out the close of that candle, which is here. To keep it on regular trading hours, now we're looking for previous day 9:30 open, okay, and of course that would have been here, okay. Close 9:30 open on Thursday the 22nd is here. We'll mark that level out too. Okay, so quick recap. We've got all our levels marked out here, and it's not many levels. For me, you don't need many levels. You really are only looking for small scalps from one level to the next. This just helps to give us a framework. Okay, so we've got all our levels marked out. We've done our higher time frame analysis. Now we're looking for our setup of entry. So I've just color coded our premium and discount levels. The fair value level, which is the midpoint between the premium and discount, is red. Okay, so as we go down into our lower time frames, we can see whether we're in a premium or a discount without having to go back to the higher time frames. Notice we are in a premium. We are above the red line, which is the midpoint of premium and discount. Okay, the fact that we're in a premium means that we are looking for shorts, and because we know we're waiting for shorts, what are we looking for? Let's see if we can find a PD array, a fair value gap, order block, volume imbalance, okay? So when I see this push up here, I'm looking for shorts. I'm in a premium price, I'm looking for shorts. I'm not chasing price. On the higher time frame, let's look left. You want to be looking on the 1 hour, the 4 hour, and sometimes the daily. In this case, what have we got here? As we see this price push up into an extreme premium, we are looking left. We have a 4 hour fair value gap and a 4 hour order block. We mark out the order block, back down to the 15-minute. Look at how we tap into 50% of this order block perfectly and get our reversal. Let's look at our levels. We are now above yesterday's open. We have swept out Asia high and previous day high liquidity. We are above midnight open. We are in a premium, as I mentioned, and we are above yesterday's close. Now, at this point, we are tapping into a 4 hour order block. We are now looking for our entry. Okay, let's get into the thick of it. I take my entries on the 1 minute. You can take it on the 5 minute, 15 minute, the 10 minute, whatever suits you, however you trade. I trade the 1 minute. I've just found that works best for me. I am looking for a 1 minute inversion fair value gap. And what do we have right here? There's your 1 minute IFVG. Now, if we look at our levels and our setup entry, we don't actually have accumulation, manipulation, distribution here. Okay, we don't actually have AMD. We have had our liquidity sweep in the form of previous daily high and Asia high, which we swept. Higher time frame delivery we do have, which is this 4 hour order block. And that's what we're basing this setup and entry on, is higher time frame delivery. Do we have equal high or lows? Well, do we have equal lows below to target? In this case, no. So again, we are not looking for all of these confluences. We are looking for select ones that go together with other ones, enough to give us confidence that this is a high probability trade. Low resistance liquidity, we don't have in this case. A decent area to break even. Initially, we don't have a clear break even. However, once we push down, have this retracement back into the 1 minute, I would be looking at breaking even at this point here. If this came up and stopped us out, we'd be taking a loss in this situation. Let's just mark out the actual short. Here's the entry. This is your stop. And in this case, I would just be targeting a 1 to 2. Now, you can have your stop at this point here. You can have the stop at the candle that created the bullish gap that was then inverted, or you can have your stop at the high. It really depends on how you like to manage risk, on your account size, account type. In this case, I took this trade on Friday and I had my stop here for a clean 1 to 2, and I was happy with that. 41 handles, bagged and secured. Kill zone, yep, we're in the New York AM kill zone here. SMT, do we have an SMT with ES? Let's have a look. This is that same 4 hour order block on ES. This order block is this order block. ES has reached nowhere near that. So we have a bearish SMT there, an extra confluence. So that's a short that I took on Friday. And this 1 minute inversion fair value gap paired with the other confluences that we've talked about is a higher probability, mechanical, repeatable, and in my opinion, simple entry. All we've done is determine that we're in a deep premium. We waited for a 1 minute inversion fair value gap, delivering out of a higher time frame of 4 hour order block. Simple stuff. As we started to push out of this order block and retest it, I actually took another short entry here because our framework is still the same. We're still in a premium. premium. As far as I'm concerned, this consolidation is not even really the real move. And as you can see a little bit later on, we get this stronger move right down into our levels here. Look at how price reacts around the 9:30 open. We then push down to Asia high and previous daily high and eventually return to midnight open. Why did I re-enter here? Well, we have another 1 minute inversion fair value gap here, which is our criteria for entry. I do not enter any trade unless we have an inversion fair value gap. That is the only part that is non-negotiable. So we waited patiently for price to push up. We ended up getting 2 decent short entries to end the week with some nice profits. Okay. The reason we mark out all of these levels is to determine whether we are in a premium or a discount. Also to have decent data points for targets. Okay. So when I see that we've got all 3 of these levels here, and I'm taking a short from this position here, I'm monitoring how price reacts at those levels, and maybe I'll be trailing my stop. But essentially, I'm targeting midnight open from this position. I'm hoping that that has got enough detail in it, but it's not too complicated. Let's just get rid of everything. Of course, like with any trading setup or model, there are some ins and outs and confluences that you may not be familiar with. If you have any questions or I've not explained something correctly or something's not clear, then just ask me in the comments. Now I'll be trading this model AM session from 2:30 UK time, okay? So subscribe to the channel if you want to trade this with me and a few of my friends. If you enjoyed the content, then give me a like, and yeah, hope to see you in the live sessions now. Peace.